Well, happy Sunday, everyone. Hey, it is Shooter Scott Henderson, and we're going to go over swing trade notes. Of course, at the end of our presentation, please do review our disclosures. Last week was a quiet week for me. Nvidia didn't really work too well. We basically got out of it with our skin still there. So, booked a little bit, about 95 cents a contract. Outside of that, really nothing else got played in that last week just because of what was going on in my life. Of course, we have Thanksgiving week coming up this next week, so I'm probably going to stay light as well. Typically I don't like to trade between Thanksgiving and January 4th or 5th, whatever that first 2 days back after our New Year's holiday, simply because of how the markets react and how thin it is. It's very challenging to maintain any type of positions there. So history has taught me to avoid it. Not that I'm suggesting you do the same, but at least stay light and take trades that you like. Earnings this coming week, we got Zoom on Monday afternoon. Then we've got retail coming in Tuesday morning. We got Kohl's, Best Buy, Macy's, Dick's, Burlington, etc. I think that gives us a handle. One reason I'm using this as a lead, we've got SubX listed as a long position. We put it in last week's, and to this week's it's continuation. I think we have a pretty good size uptrend in front of us here on this. So I think if retail does pretty well, that sort of reinforces a decent position size on that going into next week or the week after. But honestly, most of the swings that I've set up, I'm looking into January or February, March is my thought. Now, let's start off with Dominion Energy here. Now, right now, what we're making a little bit of a change. And Kirk wants me to focus on trends, sort of stay away from the me and the FOMO stock. And so we're going to be looking at, continuation patterns, uptrends that have got a decent pullback, and Dominion is a good example. We basically have hug trend support, little higher low kind of thing. So we look for continuation. We also got a breakout potentially at 63. I see this up to maybe $70 by the end of first or second quarter. So, maybe I'd risk $2 on this. That's something else you're going to start seeing on the charts. Just giving you a dollar figure, hey, if we're at $58, I don't know that I would hold this below 56, or structure your trade around that accordingly, where you plan on adding if it breaks below that. But my stop in this scenario roughly would be 54.90 based on the prior low, or at least the system I use. Now, I like the April $60 calls because there's no spread on those, and it sort of gets us close to our target, gives us a little time sort of to ride this out. So that's sort of my thoughts on that. Now, Dominion also is, a cash secured put candidate, maybe $55 to $60, depending on how aggressive you want to be, but it also sets up pretty decent there, and they have a decent payout. Now, Hood, I think this has a lot of upside. I think we got, $50, $60 on this with Bitcoin. And again, this is another uptrend. The only thing I don't like about this look, but it was one of the better looking charts that I looked at. So we got this flag look, sort of the breakout, but then we have this flat. And what we've seen in a lot of the crypto stocks is they develop a flag and then they break out anyways, and they don't ever really complete the flat look that we get quite often because they're so aggressive. And the way that I'm looking at this, we have these mounds that are clearly established on the uptrend. Right. And now we back tested, took everything out. So all this FOMO that here is gone on this flush. So we're starting again. It's pretty aggressive. So we're going to roll over probably around $41 is what I think. And then we launch again. However, that does not mean we don't break out if Bitcoin does. And I think there is a big chance that Trump comes out and makes some kind of comment in advance that he is going to use some of the U.S. reserves and buy Bitcoin. I think we could see, 20, 25, maybe even a $30,000 pop on Bitcoin from that news, depending on what percentage he announces that they're going to make it in the strategic reserve. So, this is one of the stocks I like to the upside for that. I think if that occurs, we could see $50 on this pretty quick. So I like the January 40 calls. You can go out to February or March if you want to, buy a little more time. It's up to you. The prior low, 34.17, is where, and let me talk about stops for a second. When I structure a trade, I always have a defined plan of what I want to do. That doesn't mean you have to follow me book and neck and quarter, but ultimately at 34.17, it's not really following my plan. I want to break out here. I want a flag developing, then a breakout, or I want a developing flag. Give me a reason to extend this out a little. All right. So I really don't want to get below 34.17. If that's the case, maybe we are going to back test to 30 bucks. I really don't want to hold it too long. But the reality is maybe 34, 33, 32 is viable to the downside if we get a back test here and Bitcoin pulls off. So, of course, you want to follow that, in how you're structuring the trade. I still think the mound is developing, and I think we got one more push based on where the RSI is here. Because in each grouping, in each push, RSI and mounds confirms on different strikes. So drive 1, drive 2, drive 3, etc. Drive 1, drive 2, drive 3, for etc. And here we basically have drive 1, which is really shallow, drive 2, drive 3. So we got sort of a confirming high, but it's not a higher high in price and higher high in RSI just because of the structure. But in that second push, or the third push, we sort of confirmed on the first drive, divergent second, divergent third. And then what did we get? We got that nice little flush afterwards. So we had clear divergence in that look. So this next drive, so we have sort of a lower high in RSI, higher high in RSI. I think we come in and put in a higher high in RSI here, which would give us a push up probably above 40 bucks. So that's sort of my thought when I'm looking at this. Structurally, I like to look at RSI a lot because it paints a really clear picture for me in how I look. Now, a firm we put up last week, it's working. Bought the January $60 calls. You're well into Monday. It is not too late to take February $70 calls. I am looking for this to completely recover this leg and head up towards this 176 point, probably the later part of next year. So this is a stock that I want to chase for a little while, has some decent upside. And of course, any pullback to me is a buying opportunity as far as this looks. Close below the breakout. All right, 52.48 sort of invalidates that thought, but that's what I'm looking. All right, so now again, this was in last week's article. Again, it's not too late. 102.80. All right, nice look, nice pump, continuation here. Broke out of the flag. All right, 107.66 is our resistance, which is my swing turn. All right, so 105 January calls or February 110 calls are still viable. The only reason I start losing interest a little bit is risk $4. And even in that case, with this, look how aggressive this pump is. Because realize, I think retail, and that again, we're going to have big reporting on Tuesday in retail. I think if the retail is back and does decent, I think Subway recovers, and we're looking at all-time highs up here around 100. So that's really my game plan is to get into some of these trades and stick them out and try and ride them out until it invalidates that thesis. So close below that 94.60. Would indicate to me that we might still chop around here, because we could come in, look at a trend line up here. There's nothing that would prohibit us from going back here. Sort of a wedge. I mean, we could come all the way out to 2027 and stick around 89 bucks and then go. But the look here, if we draw a trend line here, it's broken out. We got some good follow through. I love this volume candle off the lows. Look at that. Look at that. Basically, that's the highest volume candle we've had in 6 years, right? And this is a FOMO stuff. So I like it for continuation. Now, Sophie, same scenario. To be very candid, this was something I didn't, I hesitated. I did, not going to lie. I like this because it's confirming. I think 20 bucks is very viable here. I think all-time highs are very viable here. They're doing something in banking and finance on the technical side that's giving them an advantage. To be very candid, I'm not sure exactly what that is, but clearly with the FOMO, the repeated buying in calls on this, 3 weeks in a row, it's been on my top 5 list for volume increase in the option. So that is pretty significant. It's telling us that we're going to continue here. So I'd like a pullback, but the count doesn't say that we are, and I expect this to adjust higher. I expect us to get a target of maybe 17 bucks. Now, initially, looking at slightly in the money January $15 calls or February $16 calls versus where we are. Reason is I want to be conservative with this look or wait to enter until we get a pullback. Better entry would be around 12.80. But I think this just keeps running. I really do. I just with the FOMO that's in the market, I don't, we probably do get a blow off top because now my thesis on that is waning in the last 2 weeks because we did not pull back. There is literally limited resistance. We have China's capital coming into the markets. We need a catalyst to shut this down because we have the Trump euphoria coming in, which is going to last at least 1 quarter into 2025. So I think we got quite a ways to go. The only place I see a lot of resistance is S&P 700. So, it takes a lot for me to get this bullish where I am, and Mr. Market will probably make me wrong, but my feeling is this rally continues. And Sophie's sort of a play on that. All right, that's what we have for this week, folks. Great trading until next time.